Bitcoin isn't just for corporations like MicroStrategy anymore. It's a lifeline for individuals like you and me. In this video, I'll be revealing why Bitcoin is now the ultimate play to beat inflation, resist entropy, and protect your sovereignty. Stick around at the end. I'll share my raw takeaways on how this changed my outlook completely. Now, I'm going to touch on quite a few points, as I usually do in these sort of videos, because adding my own take is what's going to give you that deep insight, from my own perspective at least, as a Bitcoin investor for a few years now, in this space and this asset class, to see the light at the end of the tunnel. Right, so the first topic about where Bitcoin finds you in times of need, and for me the genuine urgency or need is how we can best combat this growing issue of inflation, because it's not going to go away, and we can forget about the central banks out there who have in their remit to protect the economies by lowering the interest rate, which is the ultimate tool that they have under their disposal to control the rates of inflation. But even if they do that and lower the rates in order to have the current rate of inflation under control, it just really doesn't really solve that, right? As we have seen time and time again. And what I'm trying to say is that is the urgency, that is the genuine need, where we should wake up to the fact that we should better protect our own wealth, better protect our own finances, and find that solution. And the solution in times of need is, I'm afraid, it's Bitcoin, right? I also can give you my personal stint on it. So me as an individual, as with many of us, inflation was a concern or driver for me to invest into Bitcoin. But it wasn't just that. It was back in 2020, I had a UK pension fund, private fund, where I've typically invested in a diversified set of portfolio, mostly on ETFs in the US, in emerging markets. And during the 20 years that I've invested in this private pension fund into a basket of ETFs, it's only yielded 20% at the end of the 20-year holding of those investments, which is it really peeved me off, right? It tells me that what I have done, the decision that I've taken to invest in this diversified portfolio, and this word of diversification that we're all hearing about, you all hear your own financial advisors keep rabbiting on about we need to diversify a portfolio. Well, this is what I did. I diversified my pension fund into a basket of ETFs that they've actually suggested that I do, which I did at that time, which didn't yield that much, as I said, only 20%. And I haven't earned much from it. That is the bottom line. And that was, for me, my aha moment, that I need to really take back control of my finances, move away from my brokers that I've used them in the past, who gave me these suggestions to diversify your portfolio into these ETFs or to some other leading stocks at that moment in time, which, as I said, haven't yielded me much. And really, I did my own research, right? I had to take control of my finances, my wealth. I had to start scratching my head and say, listen, I need to do my own research, my own homework. I need to spend some hours reading into what are the leading growth sectors out there. And what I found quite quickly is, for me, there are two ultimate growth sectors: AI, artificial intelligence. So investing in high-graded stocks, NVIDIA, AMD, could be any other AI chip maker stock. So I invested in NVIDIA in my case. And as a second growth engine that I've used to part some of my pension funds into crypto, I invested in Bitcoin. And this was back in 2020 where I've actually started investing into both of these asset classes, AI stock and Bitcoin in my case. So that is my portfolio. I've kept it simple, and I moved away from the diversification principle, which we've all been hearing about. This is all that's been recommended by TradeFi, by Wall Street to their clients. You need to diversify your portfolio. Well, I've just done away from diversification. And I felt, for me, the ultimate need was to how I can move away from this 20% yield that I've achieved at the end of my 20-year holding into one of a non-diversified portfolio that yielded a much greater rate of return. And that was my objective, right, which is what I've done. So during the past 4 years, as I said, I started off from this non-diversification strategy into AI, equity stock and Bitcoin, and I've yielded double to triple digit rate of return during those 4 years, and it's still growing. Of course, there's always going to be moments where we're going to be seeing peaks and troughs of your investments over time, particularly when we're talking about a young asset, which is Bitcoin. It's only 16 years of existence, and what breeds the rate of return is volatility. Not to be confused, mind you, with risk. For me, volatility and risk are two different factors, and one don't necessarily relate to the other and vice versa, right? And you've probably heard the same thing, incidentally, that volatility is what drives a much greater return of your investment, but it's not necessarily akin to risk factor. That is an entirely different proposition. So for me, that was my ultimate urgency or need why I turned into Bitcoin, right? It's through inflation, but importantly for me was that low rate of return that I've achieved previously from my pension funds that actually invested into the ETFs, which I moved away from. And for others, from a corporation standpoint, as I've alluded earlier on, the orange pill moment for Saylor was the fact for him, the urgency or need to turn to Bitcoin was a failed business. It wasn't really yielding that much of rate of return because it actually fronted off the 0% or even negative yield predicament like the rest of us during the pandemic era. So those are the two kind of journeys why we can see quite quickly that the decision was quite unanimous in that in both journeys, the Michael Saylor orange pill moment and my own personal investment journey, quite rapidly reached the same conclusion as to what other asset away from TradeFi we can place our wealth in, and it was Bitcoin. And so that is the point of this segue here. It's that lifeline for financial refugees who are having it difficult to safeguard and protect their wealth, growing to the long term, but bear in mind there is a lot of entropy and chaos and inflation that's floating around us all the time. The next point I'm going to talk about is this notion of favorable changes that we're seeing in the regulatory standpoint for crypto and Bitcoin at large. So this point on SARB 121. Now, for those non-US folks in the audience, what this means is it enabled banks for the first time to custody crypto and particularly Bitcoin on their platforms to their clients, but under a 1-to-1 loan-to ratio, because what has happened before it got repealed and done away with was it was quite a huge constraint for banks, because what they had to do is, in order to custody, let's say, Bitcoin on their balance sheet on their platforms so they can offer it as a loan to others, was to deposit a much higher rate of collateral in order to, let's say, safeguard 1 Bitcoin. So let's say they need to put in 1.5 Bitcoin worth of collateral, fiat collateral, in order to deposit and protect that 1 Bitcoin held in its custody. Ever since the SARB 121 got appealed and done away with by the Trump administration earlier this year, we don't have that constraint anymore for the US listed banks. So this is good news, because this means that for the first time, banks can effectively custody their clients' Bitcoin on its platforms under a 1-to-1 loan ratio. So that is an important breakthrough, and that would certainly be one of many catalysts for Bitcoin to appreciate quite significantly over time in its price. So Bitcoin in this respect is no longer a political taboo, because the US, in terms of financial institutions and other sectors of the economy and other nations, we are seeing nation states adopting Bitcoin, buying into Bitcoin, they're embracing it too, right? So this is here to stay, and this regulatory environment we are seeing, there's going to be more favorable laws that's coming out. One is to do with stablecoins. Remember, stablecoins, for me at least, are the medium of exchange, so it would enable those cross-border payments to be settled over the blockchain without worrying about intermediaries involved or worrying about those hefty fees. So if you think about the credit card payments that we issue, there's an excessive long leads, so it gets settled several days, and we have to worry about 2.5%, 3% of transaction fees for every transaction we make under SWIFT or and so on. Well, not the case with stablecoins. So stablecoins is cross-borderless with a fraction of time to settle those transactions, because they are settled instantaneously on the blockchain, at a fraction of the cost, right? And it also helps with the unbanked. So those parts of the population in the world who do not even have a bank account, well, through their mobile phones, they can easily store stablecoins pegged to, let's say, a US backed dollar on their mobile phone without the need to have a bank account in order to issue these stablecoin payments to everyone, absolutely everyone around the world, whether they're unbanked or debanked. It's independent of the individual financial situation. This is one of the beauties of digital assets, investing in digital assets, and for the purpose of using it as a medium of exchange, which is what stablecoins offer, right? Well, it's clearly the benefits are there to be had. So this is the point, that even with regulatory ties, we are seeing clarity for the first time in history that there's going to be regulatory frameworks coming out to provide that clarity, to enable those fintech players who are going to be ultimately responsible for rolling out these stablecoins issues to their customers, and also for digital assets, how we can custody digital assets under self-custody, right, depending on where we are or where we live in the world, right? So these sort of regulatory frameworks are, for the first time, are being established and would provide that desperately sought clarity that we need for us as investors, but also for other actors like fintech players, even banks, institutions are getting involved in this area. This is a win-win for everyone. Having that clarity is important. I want to also move on to what is the investor behavior in terms of how they position themselves into investing on these digital assets like Bitcoin. Well, it's fair to say the old wealth moves rather slow, but what's important, it's moving, right? That is the key point. So Bitcoin in this respect is finally breaking into strategic portfolios. We are seeing for the first time financial advisors advocating to their clients that they need to move away from 0% allocation to Bitcoin into a manageable percentage that they're comfortable to live with. And importantly, to see it through into the long term. That is, for me, the important aspect here, because inflation, as I said before, is that universal pain point driving that shift globally. Right, and moving on to the next point about Bitcoin for the unbanked. Well, for billions globally, Bitcoin is the first real bank they've ever had, right? Before the pandemic came about, as I said, the journeys that I explained earlier on in this episode around the orange pill moment from Sailor and my own personal journey, where I had that light bulb moment that I need to do something more robust, more advantageous for me than just simply holding into a diversified portfolio, which I had many years ago, right? Which didn't avail to anything, as I explained earlier. Well, we need to kind of turn to much harder assets, including for those that are unbanked in the world. So you can imagine there are sections of the populations who are having it difficult to reach ends meet with their expenses, with their low wages. But even for those sections of the population, the beauty about Bitcoin being highly divisible, so you don't need to necessarily have to be concerned about acquiring a whole Bitcoin. You can acquire individual Satoshi. It's just a reminder, even though one Bitcoin costs more or less $100,000, if not higher than that, it can be divisible into 100 million units of a single Bitcoin, namely Satoshis, and not necessarily be concerned about acquiring a whole Bitcoin. The many attributes that Bitcoin has is its divisibility, right? Not like gold, where you need to acquire a whole ounce of gold at a market value, I think is around $3,300 per ounce. That is still high, but you're obliged to buy a single ounce as a minimum unit of acquisition, which is not the case with Bitcoin because it's more highly divisible than gold. You don't have to worry about getting a whole Bitcoin itself. So that is the advantage, that for any type of individuals from all walks of life, if you're on the high end of the earning spectrum to the lower end, middle class, lower end, anyone, absolutely anyone, has the opportunity to invest as a matter of a few dollars, even if it's just a few dollars that you may have, into Bitcoin and hold it into the long term. You will not regret it. And that is the point about how Bitcoin can certainly help those individuals, those sections of the population who are finding it hard to reach ends meet. They themselves can equally participate and invest in the Bitcoin asset class. Even for those who are unbanked or being debanked by their banks. So that is the beauty of what Bitcoin provides to individuals at a global scale. And this leads to whether it's too late to invest into Bitcoin. Well, I think everyone thinks that they are late. We are seeing now it's hovering, it's June 11th, and it's hovering around $108,000. And you may think, oh, it's too late. But as I said before, you don't have to buy a whole Bitcoin. You can buy a few dollars worth at a time. You can dollar cost average small amounts that you're comfortable investing into the Bitcoin asset class and forget about it into the long term. You know, you can do that. You can adopt that kind of strategy. DCA and HODL is my advice. So in essence, we're never too late, right? Because the game has barely started. The first movers will reap the generational gains. And this is the point. You need to really do that research, be convinced that holding into an asset class like Bitcoin into the long term, independent of how much you invested, is the best advice that can be given to you as an investor, particularly those who are worried about transferring their wealth, their analog wealth, to their future generations when they're no longer with us. Again, that is for me another urgency need for them to start scratching their heads and do something about that before, you know, it gets too late. And then the last point about freedom. I made a couple of videos on a more deeply philosophical side of Bitcoin, because for me, since I've been holding into the asset class for many years and convinced that I'm going to get that humongous rate of return if I continue to hold to the asset class in the long run, and particularly thinking about passing the wealth to my next of kin, I'm starting to unravel other aspects or other attributes that I never saw when I first initially invested into the Bitcoin asset class. And for me, that is freedom and thinking about saving for today, but spend it for tomorrow. So for me, those two attributes, that longer time horizon and freedom, is what really I'm starting to unravel and see. Because with all the noise, with all the chaos, with all the unilateral decision making that are made by these political leaders, the fact of the matter is we'll never ever truly understand or get to the bottom of these shenanigans that's happening and the triggers of the macroeconomic conditions that we are seeing. So the best tool that we have is freedom. And what I mean by freedom, if you invest in the Bitcoin asset class into the long term, you're going to be safeguarding your freedom not just for now but into the future as well. And that, for me, is the ultimate hedge. It's the ultimate hedge against the problems of inflation, having to fight and worry about how the rate of your erosion of your savings because of this inflation problem that we're in. But importantly, the entropy. So things like how we can fight against the shenanigans, those policy decisions that are made by these political figures, right? Without our discretion or without our approval, right? Or even without our knowledge, particularly in countries of the world where it's run by authoritarian regime or not, right? It's indifferent. Unfortunately, it's indifferent. No matter where you live in the world, we are living through the same problem, the same old problem. So resorting to Bitcoin is that ultimate hedge, and that will give you the ultimate freedom. So Bitcoin doesn't care about your politics. It doesn't care about your status, and certainly doesn't care about your passport you have in your hand. If you believe in freedom for all, even your enemies, this is your tool. So that is pretty much what I like to discuss to you today. And really, I just want to leave you a final thought, as I usually do in these sort of videos, is whether you're in Nairobi or Sydney or New York or even in London or somewhere in Europe, Bitcoin doesn't care where you're from, what you earn, or what your bank says. This isn't just a market play, it's a moral shift. If you're here early, congratulations. But if you're not and you're just arriving, welcome. The door is still open, but it won't be forever. So if you enjoyed today's episode, please don't forget the like button to share the video to colleagues and friends. And if you haven't done so already, please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So invest wisely and invest in Bitcoin. Until next time.